All right, we're back. Welcome, everyone. It's Tuesday. The live trading room with the 5ers is back. We are going to do some live trading today. It's going to be very exciting. How are you doing, Victor? Welcome, Victor. Welcome, everyone. I told
I'm
Victor
doing.
right
Go
before
ahead.
starting. I was jumping on the trampoline for a couple of minutes before, so like took a little while, and then I had to run down in the office. I'm just here straight from the trampoline. Is what I'm doing. That's the life of a trader. Yeah, it's a roller coaster. It's a trampoline.
Hello, everyone. I'm excited. I hope you are too. That intro music, I think it's been conditioned into me because when I hear that sound,
Yeah.
it energizes me. I don't know about you, but I feel those boxers ready to get ready to rumble. They're hitting their gloves together. Although you
Yeah.
shouldn't be too excited about trading, we should be calm, relaxed, balanced. But I mean, I still felt it.
Yeah. I mean, I'm ready. I'm ready to start a fight with those market makers, It's trying to get my stop loss. I'll show them. I'll show those market makers. Right. So yeah, today we um I had a structure for today's live stream, and it's on some of my. It's on one of these papers. Like I have hundreds of papers here on my screen, and it's on one of them. What I do know, though, however, is today with the giveaways. I'm going to say that we're going to be doing the giveaways at 200 likes. So yesterday we said, let's do 2 likes at 200. We're starting at 150, but today we're going to do the giveaways at the 200 likes. I'm going to give away the code in just a minute. You can go in, you can register for the giveaway and everything, but make sure that you also click that like, because at 200 likes we will initiate the giveaway. And a new thing that we're doing here today, because obviously we're doing the giveaways because we know that there's people out there who are really good traders, but they're lacking capital. Okay, so we got traders from all over the world, and some parts of this world where we have really, really talented traders, but they simply do not have the capital necessary, and a free account or the hub credits that you're going to get, and you can use it for another account with the 5ers Hub, can be truly life changing. But we want to make sure that the ones who are actually getting the accounts are the ones who are here watching the live stream. So what I'll do is I'll announce the winner, and then you have 1 minute to actually confirm that you're the winner. And I'll be doing so by asking you to write out not the full email, but just a couple of letters from the beginning of the email that you use to register with the giveaway. So make sure that you're actually here during the whole live stream if you want to get one of those accounts. If you're not here, we'll just give it to the next person. Okay, yeah. Barry, what's up with this one? Everyone said to buy a lot. I won. What the hell? You really won a lottery ticket? You should have gone to the casino and went all in on blackjack. That's insane. Well, that's too late now. That's too late now. That was yesterday. Good luck. I mean, that's incredible. All right, Michael saying my best Forex live session. Yep, this is my best Forex live session as well. Thank you for joining. Barry, next time you buy a lottery ticket, I'm gonna ask you to buy one for me as well. But statistically speaking, you're not gonna get that lucky again. Sorry to tell you, but that was your day. Now it's just
You
downhill
never
from
know.
here.
You never know, right? They
Oh,
say
yeah,
lightning doesn't strike twice at the same place, but I mean, there is a chance,
yeah,
although it's very, very, very unlikely.
yeah. I've heard about people getting struck by lightning multiple times. Yeah, but yeah, trading. Let's get into it. Into it. Tomorrow is FOMC, so a little public service announcement here. If you are trading during FOMC, you can expect slippage. You can expect widening of spreads, and you can also expect to be part of the statistics of traders at the 5ers who lose a lot of money because of FOMC. And this is true. Okay, so we have our Discord community, our Discord server, where we actually go out and we post pre news event and we say, people, please take it easy, because we see there's so many accounts being blown during these news events. So guys, you're not going to become a millionaire with one trade during FOMC. You're most likely going to be hitting that stop loss. So be careful. Unless you have a very solid strategy of trading these news events, you have no business trying to outsmart the market at the most critical point when there's massive spread and slippage at those points. So be careful.
Yes, indeed.
Okay. What are we looking at today? I want to update you guys on something that we and by the way, we're going to be doing those, quick, fire away with the questions as we did yesterday. So make sure that if you do have any questions for me or Victor or whoever, obviously for me and Victor, uh you have them in the comments, and then we will save them in our little magical box of good comments, and then we'll pick one and we'll go through those. So make sure that you do give us all your questions if you have anything. Right. So yesterday, yeah, this is the trade that I closed yesterday, but we talked about NCD CHF yesterday on the live stream, and so what I said was, if we have, a break above this range right here. So I was watching, we have a high time frame level right here. I like the fact that we have a sort of like a move move to the upside here, something like that. That's a very bad error, but we have a move up. We retest we have a break and retest right here. You can view the break and then rounded retest. On the retest, we're getting consolidation here on the 4-hour. And I said that my confirmation of this trade is to have a 4-hour candle closing above this level. I would then enter on that level right there, look to TP here with a stop down at that level. So what happened was, we had, of course, that little fake out right there. So when we had that wick coming above the heights right here, we had that little fake out, and that's when I had an alert going off, and I waited for that 4-hour candle close, and of course it closed as a bearish candle during our live stream. But what happened later on, the next 4-hour candle, is quite important, which is not that one, but this one right here. That's the breakout candle on the 4-hour, and you can also see that you have that last high pre-break right there. And of course, this is the problem. Maybe not a problem, but for me, a lot of times, I see that the good trades, they activate when well, it doesn't happen all the time, but it does happen. Some of the signals that I get is when I'm not available to be trading. So this candle right here closed at 11 p.m. my time, and I'm usually in bed at 11 p.m. right? But that's the idea that I had, and that's the whole trade. And what happened on the next candle is we got filled on that one if you had orders in, and then we kind of started trending higher. So it's a pretty decent, pretty decent rounded retest here. Not a rounded retest, but it's a pretty decent retest with a rounded bottom, and then you see price continuing higher. What I did this morning was I looked at this, right? And I said, oh, you know what? Now we have confirmation of the trade. So I'm going to place limit orders here. But the problem with this is I want to get in at the best time. I want to get in at the best area at the best time. And if my entry is already gone, like, I don't want to see price come back down here, rejection at that resistance. I don't want to see price come back down here and then up, right? So I placed orders for this trade. And then a couple of minutes later, I looked at this trade and I'm like, wait a minute, the trade idea has already happened. My entry trigger happened yesterday. I should have been in this already, and I'm not in the trade. So what I'm doing now is I'm trying to chase a trade that I should already have been in, right? And the truth of the matter is, when price hit that level right there, I would already have had my stop loss here on the first trade. So why I'm saying this is, I've only taken one trade this week. Okay, only taking one trade. And honestly, if I'm looking at the markets, I don't really see much more opportunity for me as a swing trader in this market this week, unless things change dramatically with the FOMC statement and press conference. So this is a good example of, we wait for the market to tell us when there's a trade available. And if you miss that trade, you miss the trade. There's nothing more you can do. You can't force it. You can't chase a trade. You have to wait for the setup to appear. And if you miss those opportunities, then you missed the opportunity. You go on and you wait for the next one. I think a lot of you watching here, you can all relate. I know Victor can relate as well. Sometimes we take early entries. Okay. Sometimes we take an entry where, it might be 10 minutes before the candle is closing. And we think, well, you know what? It's going to close in 10 minutes. It's going to close as a bullish engulfing. I'm just going to enter the trade. 15 minutes later or 10 minutes later, it's a bearish engulfing. It has happened a lot of times. And that's why it's so important to wait for that confirmation.
Yeah,
Yes.
you're making a great point. You have to wait.
Thank you, Victor.
Actually, and your trade plan should define when do you need to click that button. It should be defined. If it isn't, then your trade plan is not complete. And
Yeah.
you only should be clicking that button at that moment defined in your trade plan. And that is a specific moment, whether that is a close of a candle, then it is the close. It is, 1 second or a few seconds before or after that close. But it is with that close. And I say before, and that may sound bad, hey, you need to wait for the close first. Well, the thing is, if let's say you're entering at the close of an H1, and that H1 is way above, let's say you're entering as a bullish engulfing, and it's way above, it's not going to undo in the last 2 seconds that bullish engulfing, then I can make a case that you can enter 1 second or 2 seconds before. It's not going to make a difference. But of course, if you're entering on a bullish engulfing on the 1 minute, perhaps you need to wait for the actual close, which is the best advice for everyone. You actually have to do that on the event that is defined in your trade plan. However, I do have a little a little question here, Jonathan, for you and for everyone else watching. If your entry, if your signal, the event, your trigger to enter the trade has come, and for whatever reason you did not enter, and the trade is open, right? Not a trade, but the signal, has happened, so you should have been in. It hasn't invalidated your entry, right? So it hasn't done something in your trade plan that would have made you close that trade. However, it comes back to your entry level, at the level that the signal told you should be in the trade. Would you still enter the trade or not? Because technically, you would be in the trade. It would have come back to your entry level, and still nothing has changed in terms of invalidation, other rules that may have taken you out. Would you still take that trade?
No, I would not, because it does make sense. I mean, everything you're saying, it kind of makes sense. You can think, well, I would already have been in the trade, so why shouldn't I enter the trade? But I'd like to, I wouldn't have the confidence in that, because I would probably start thinking, wait a minute, this is not, this is not usually what I'm doing. This is not the way I've tested the system. I'm supposed to enter. And also, for me, the thing is, usually when I enter a trade and it starts moving in my favor, a lot of times it's moving straight to TP. I have very little drawdown on my winners. So I know that if my trade goes up halfway to TP and then back down to entry, I'm probably maybe even going to look at exiting that trade. So that question doesn't really apply to me, I would say, because if I have a signal and it's then back at entry, I'll start looking at potentially exiting that trade. But I know what you're saying, but there's a lot of invisible things going on here that we don't really know about. You have to test this, right? So you have to create a. I mean, the thing is, when you're looking at a system, you look at, for example, okay, you ask a question. So how often does a does price move 20 pips to the upside after a bullish engulfing candle? So after a bullish engulfing candle on the daily, how often does price move 20 pips to the upside? And then you get statistics on that, and then you build a system based on that. So you have to ask yourself, how often does a trade become a winner if there's an entry signal and then it gets back to entry? How often is that a winner? You need to have that statistics, and it's like it's yeah, you need to be super nerdy with like the statistics of this. You have to really be thinking that the probabilities and the statistics of your trading system is the only thing that matters, you know?
It is. You're hitting the nail on its head here. What you need to do in order to know if you should or not enter at a later moment is you should have. If you don't have any data, you shouldn't do it, because you should only do whatever you did in your backtest. In your backtesting, you didn't wait 20 minutes after your signal to enter. You entered, the data you have is based on that event happening, you entering right away. And you should be doing that if that's the only thing you have, only data. But if you do have data, the question is what happens when let's say the market went 10 pips in your favor, 20 minutes later, it comes back and it's back at BE, right? Break even, where you enter. And the question is, what is the results of these trades once you don't enter right away, and it goes 10 pips, or even if you enter and it goes 10 pips your favor, comes back to your BE, that is the filter that you should be applying to your data and selecting that subset of trades that have done exactly that, and look what's the average they do, what is the expectancy, is it still positive expectancy? If it is, then based on your data, you're still able to take that trade. And if it
Yeah,
isn't,
and I mean,
then if
yeah,
it isn't, then you shouldn't be taking it. And if
yeah.
you don't know that data, you shouldn't be touching. You should be only be entering at the moment your trade plan tells you to do so. That's an exercise for everyone, because if you consider this, then you wouldn't be chasing anything else unless you have the data, right? No
And
chasing,
you know,
because you only go ahead.
there's also a there could be a hidden edge here. I mean, if you get an idea that you're like, oh, I'm gonna enter this trade anyway, right? It's back at entry, and you're gonna enter the trade anyway. The thing is, if you test that idea, there might be some hidden edge, hidden alpha in here. Maybe that's the only trades you should be taking, because maybe those have like very, very
Yes,
high win rate. You don't know why, it makes no sense,
exactly.
but you look at the statistics and that tells you. So everything needs to be tested, because you don't know where you'll find your edge. Look at me, for example. Okay, I was trading a system where I had a trend following system, and it worked really, really great. I'd say from 2019 to 2023, and all through COVID, it performed extremely well. So I mean, that's 4 years of very good performance from a trading system. But in 2023, and especially this year, I've noticed that there's something wrong. I'm not getting the same results. It's just the trades are not moving the same. There's something wrong with the way this is working. I do suspect that it might have to do with how the market might have changed a little bit with trending moves with the interest rate environment. I do think, but it doesn't really matter. So what I did was, okay, what if I, instead of looking to take 25% profits at TP1 and TP2 and having 4 different TPs, what if I instead take full TP at the very first initial move? Now, I remember asking myself that and thinking, that's stupid. Like, it's not going to make me money. And I tested it,
And it's not.
it was very, very profitable.
Yeah, it's not stupid.
Yeah,
the,
absolutely
the,
not. It's like it has changed my perspective on trading this year. And I think that's also reality of trading, especially when you're trading for a few years. And I mean, my goal is I'm probably never going to stop trading. I mean, I don't see myself ever stopping this. I mean, if you
Same
know,
here.
even if I can, if I don't have to trade, I'm still going to be trading. You know, so I need to know that what I'm doing is going to be profitable long term. But I also have the idea that I know that for the next 5 years, I mean, in 5, 6, 7 years, what I'm doing today might not be profitable. So you have to have a system of testing. And I'm very happy that I've spent a lot of time developing a process for me to test different ideas. And I know a lot of you watching this right now. You're watching this and you're like, that sounds interesting, but also sounds like there's a lot of work. Yeah, I mean it's a lot of work. It's not easy. Uh, it takes a lot of time. I'd say it's easy, but it takes a lot of time to do all of this testing. But I have to say, I see that a lot of new traders are. I'm not sure if they're lazy or if they don't understand the importance of gathering statistics. I think it's the latter because once you understand how powerful this is, it's all you want to do. When you understand that that's the key to your profitability and that's the key to your future as a funded trader, then that's the thing you have to do and you want to do it because you've seen the effects of it. So, what I do is I have on schedule about 3 hours every week of back testing and statistics gathering. 3 hours every week, I have time block back testing and journal work. Okay. So, what I do is I brainstorm an idea. Like, for example, um, a daily shooting star. Okay, what's the probability of a daily shooting star moving in the direction of that candle at least 10 pips? What's the statistics of that? And if I can see that it has like a 70% statistics of doing that, then I can look at, can I develop an entry trigger based on this, based on the daily candle close? And things like this is you have to ask yourself these questions and then try it out, test it, and yeah, it
Great,
takes a
great,
while.
great point. I think it has to be a habit as a trader to be consulting your data all the time, periodically, and to before you do anything, right? Any decision you do, any action you do, should be asking yourself, what does the data tell me? And if I don't have data, why am I doing still this? If I don't have the data backing me up, and if you want to still do it, go get the data, ask yourself the question, consult the data, do the test, the experiments. Even if it takes you a couple of hours, you will have the answer actually to do it or not do it. And that should be the process every trader should have. And when you have clarity, and that's what data gives you, the if you have, it answers your question, it takes away the doubt, it takes away the uncertainty, and you can, relax in knowing that you're doing something based on evidence that you gathered. But on that note, we have news, high impact news coming up on CAD, Canadian dollar, CPI, and we also have on the dollar retail sales coming up in 5 minutes or so. So everyone who is trading the high stake account of the fivers, keep in mind this is high impact news. So you should not be opening any new trades 2 minutes before and 2 minutes after in that period of time. But coming back to the topic, so yes, it needs to be a habit that whatever you do, whatever you think, before you act upon that thought, you should think, okay, but what does my data tell me? And if I don't have the data, what should I do to know what the data tells me about something? And you can it doesn't have to be hundreds and hundreds of incidents or data points. You can start with a little pilot, 50 data points, right? 50 candlestick patterns that comply with the description, and you measure what happens afterwards for the rest of the day, the rest of the hour, the rest of the week, whatever is relevant for you, and you start gathering that data. And you never know, you might find some patterns there that will maybe bring you to make you think of a new system, completely new system, a different edge which you can combine with your original system, right? So and that's I think it's like When you're I see a trader when the trader is looking for a system, something similar as a miner, right? You start excavating and you don't know exactly where it is you're going to get that material, that valuable material, that be diamonds, gold, whatever, oil. But you're excavating, and but you need to be excavating. If you just wait for that raw material to come up, it's not going to happen. You have to go after it, and you may not find anything at the same time. It may take you a couple of exploration before you stumble upon what you're looking for. But if you keep doing it, in the end you will find valuable stuff that you can act upon, it actionable data and conclusions. You're muted.
Okay, so we have to we have a conversation here in the comments. Sensei saying, can we close already open trades during high impact news event? And then we have another one saying, I don't think so, but it's not a problem if it hits your TP or stop loss. So if you have an open trade, that you opened an hour ago, and then you decide, can you close the trade? Yeah, I think you can close the trade during the high impact news event.
The issue is to open new trades.
Yeah, open new trades. You can't open new trades. If you do open a new trade during the time window, you're not allowed to open a trade, and it hits TP, you won't get that. You won't get that profit.
But you will get the loss.
Yeah, you'll get the loss though. If it hits stop loss, you'll get the loss, but you won't get the profit. So because we before we used to change the rules, right, a couple of weeks ago or a month ago or so. Before you lost the account, I believe, if you traded during that news window. But I think what we said was, I think that's a little bit harsh. What if instead we make sure that they don't lose the account, but we make sure that it's not profitable to do so, so people are not incentivized to actually do so? Because obviously losing the account, we can all make mistakes. Now, I would argue that a mistake like that is actually quite serious. And I mean, I'm not the one making the rules, but if I had, if I had a massive account, a pool of money, and I had traders come in, and I would say, these are the rules, and if you don't abide with these rules, you'll lose your account. But obviously I'm not the one calling the shots, but I do think that even if it's just a soft breach, you need to take it very seriously. It's a rule that's in place for it's a serious rule, even though it's just a soft breach. Yeah, it's there for a reason. It's not.
It is for a reason, and it's to protect capital. In the first place, the firm's capital, but you as well. You shouldn't be doing it, because data tells us that it doesn't, it's not profitable in the long run. You are exposing yourself to big risk, and we know that what you just said, Jonathan, at the beginning, that trading around high impact news is one of those account killers. So actually, the rule is to protect you as well. It is there, of course, to protect the funds, capital, but as well as you. So you shouldn't be doing it either. So it's I think it's a great rule.
I mean, everything that's everything that protects the capital of the company also protects the traders. It's a win-win. Mim Wolf X. Also, I saw that you just got funded with the 5ers. Congratulations to you. Hope you'll keep that account. Do not trade during the news event. Can we hold trades during high impact news? Yes, you can hold trades during high impact news. There we go. We got USD CAD up outright. USD CAD is moving higher. I'm looking to take. I'm looking to go long on USD CAD. I want to just quickly show you guys my screen right here. We got this is the trade I'm looking to perhaps take later this week. What I like about this trade is the fact that I can go either long or short. I see good opportunities to go either long or short. I would, though, like to see a short here. So I would like to short USD versus the Canadian dollar, because we're obviously having a break and retest of a high time frame level right here. If you go into the 4 hour, we see that we have a very clear range here in the 4 hour, and it could just go either way right here. Let's take a look at gold. I'm interested to see what gold is doing right here. We have someone saying gold just wiped some people out right here. Well, yeah. but I guess it just came down to that support right here. So if you did actually have a trade in here, I think it depends on how you're trading, of course. But yeah, that's a big move right there. Um, I'm looking at gold right now, and I'm thinking, I'm hoping that we're going to get a move lower. We do see a potential distribution pattern going on here after a big move to the upside, and it does have quite bearish characteristics here. So if we do break this level, and for gold, I'm not going to short this because obviously the trend is so bullish on the daily. I would look, I want to long here. But if you are someone who's trading gold in a low time frames and perhaps looking for a trade to the downside, I would look for this level to first break, have a nice rounded retest right here with multiple 1 hour or even 4 hour candles closing here, and then retesting that level. And that's where I think we might put in a short trade on gold for that move down to the breakout level right there. So I think that's the way I'm. Yeah.
Yeah, I'll
Yeah.
show
Okay. So
EU
we got someone.
what
Got someone
I
trying to in the comments chilling crypto. If you come on if you come on this live stream and you're like crypto, we're gonna go all in on this shit coin, I'm gonna have to ban you. So if you start recommending people to buy a certain altcoin, yeah, I'm sorry, that's not what we do here. Yeah, go ahead, Victor.
Yeah, we had a previously, or actually yesterday, I was talking about this order block on the 4 hour. Now you see it's on the H2, but I had it yesterday on. I deleted already the 4 hour refinement of this bigger H4 order block for a possible move to the downside. That didn't happen, right? And it invalidated, as we can see here on the H4. So that scenario is in the bin, is discarded. Even this structure needs to be taken out because that's an H2. But what I have now is the H4 that left us a outside bar. That was at the beginning. That was during Asian session today, and now we are retesting this H4. Okay, with the news. We look at the H2, we do have H2 as well, telling us the same thing, even in the H1 as well. But we do have the refinement that I keep mentioning about. And so my question is, now the high impact news limitation has gone, right? We are already past the 2 minutes after the news release. On the 5 minute, I don't have any entry order blocks on this yet. On the 3 minute, I don't have. Let me check. There we go. Right. I have 2 entry order blocks here on the M3. And if they overlap, I will consider them to be the same. And the only thing that I have to do then is wait for price to get into these areas and see if I can spot a reversal from price. If it does that, that could be an entry to go long. And of course, you might say, hey, but this is risky because the impulsive move from the news is going to the downside. And yes, I see that too. But it's in the end, if you have data backing you up, it's not risky. It's just acting upon the data. What I know is that price sometimes respects and bounce off of these structures, and I want to be part of it. If you get that that entry exactly where the market has a good probability of responding, that's your job. Not even if it's close to the cliff, it's your job if it satisfies all your boxes. So that's something that I'm going to be looking for today. And I see that the 1 minute has way too many entry order blocks. So I'm not going to be using that. This is how I trade live at this very moment, right? So it's not about signaling. It's not a signal service, but I just tell you guys how I look at the market and what I'm looking for.
Man, I was just about to take a long here on EU, but yeah, I missed. Oh, sorry, wrong one. Had your screen on. Yeah, I was just looking to going on a long here on the scalping account, but obviously I missed that one. Missed that move. I wanted to get in on the bounce there, and then I would probably have sold it already. I was calculating the position size, and while calculating the position size, the price was just way higher. A bit slow on that one.
And if you look at the GU, we have the same thing, right? We have the H4 telling us that this is a great place to be buying. You have the H2 that we have an outside bar as well. No, that's not H1. That's no surprise because a lot of the times you have them. But if you have the multiple time frames telling you the same, then that's a good alignment to be taking the trade. And now I don't take it, right? I don't take it if it just keeps on printing bearish candles, because I don't want to be. I'm not gonna go in, kamikaze, knowing that it's going to, the momentum is to the downside. I want to see the reversal. And after I see the reversal, then it's my moment to get in. So it is right there at that moment on that entry order block on the 5-minute. And we'll see. We'll let the market tell us if it's going to reverse or not from this area. And it's going to take a while. And it doesn't have the same. We did have a order block here, but that's been taken out already. See that? Been taken out already. It did have, by the way, a reaction, a favorable reaction, right? But that was before it reached that H4. I'm looking for after it reaches the H4 as the retest. Remember, because we have this is the order block. It was created at the close of this candle, and now it is getting back. So it is within this movement that I want this order block to be retested, and for us to make that retest and go away from it. And I like this because it is with the trend, right? The bigger market structure. So I like this a lot. But let's see if it signals or not. I'm not going to force it. If it doesn't signal, I'm not going to do anything.
All right. Yeah, I'm in a long here on a long here on EU.
Dollar CAD?
Oh, no, EU. On EU. Just looking for a small move to the upside. Let's see about that one.
Where's
I think it's my entry. My entry is 11.27.4.
There you go. That's your entry, or let me mark that. Maybe I should put it something like this. Where's your stop? Somewhere below here, or much lower?
Right there. Below, right at the low, right at your possible entry on the 3 minutes.
Okay, right, something around there. You're going for 0.5. All right. That's as we can see right now. I hope my alerts is not.
What's the risk to reward ratio? I think this is an interesting question.
I don't have a fixed one, so I'm not looking for a specific. I'm not trading a fixed risk reward ratio as my TP. What I do is I target either the structure is this, right? So you have right. This is actually that's not it. Let me see on the right. So this is the structure. You have let's see, this is the lowest point, right? That's the lower low and lower high. You have the break of the neckline, and then it comes back into a relevant area to move out. And what's the top? Well, not the top. In this case, the top being, this is the head. But what is the bottom, although it is on the upside? What is the whole structure? The whole structure is, of course, this point. So that is my first TP based on the structure, right? So that is, and whatever risk reward that is, I don't know, it doesn't matter to me if it's 4, if it's 3, if it's 5, if it's more, that's fine. And the other one is, if we go to the daily, I don't have a reason to hold this through overnight, so I'm not going to hold. So So I don't have a. I'm only going to look for today's move. And if we look at the EU is currently at around between 51 and 60 ATR. So you can base. Well, it's going to. Today is not a typical day because we have news coming out, but I would still not correct it too much. So this is the low of the day, right? And if we measure 50, around 50 or so, that's going to be my TP based on the ATR. And of course, I'm not going to be using only that. I'm going to be using structures as well. So what I have is between 50 and 60. So somewhere around here, my ATR based TP would be. And I'm going to mark that as we speak. Let's mark that. It was around 70. It's not very important to be exact because the following, if we go to the if we go to other structures, you can say, okay, what is closer by? And I don't want to be above, I want to be below. What is closer by that makes sense, that price might bounce off from? And what I have is, of course, that daily order block, right? So I'll put it in front of that daily order block, and that's going to be my TP, which is this one is based on the ATR. And there's another question to be asked is, right, this is the first TP, and that's the second one. And you can use, I mean, you have to test this depending on your stop placement. Do you want to take everything off on the first TP? Do you want to leave? How much do you want to leave for the second TPs? Do you want to leave everything for the second TP? I would recommend taking something off on the first one, either completely off or some percentage that you tested to be a good idea. So that's it. And the risk reward, I know that I get a high risk reward because my stop are very tight, but they're not fixed, right? So if the only thing I have is if the TP is not above 2.5, I shouldn't be taking it because my win rate is quite low, right? So it doesn't make sense. Ideally, I want it to be above 3. Around 3, I can still let it pass, but not below 2.5 because as I said, my win rate is not above 50. It's around 30 something, sometimes even below 30. So I know I need to, I shouldn't be pushing it too much, but I know from experience that the bigger the stop loss is, that those trades have a higher win rate than the ones than the average that I have, which is around 30, as I said. All right, let's go back to see this. And remember, I'm not entering just because I have a structure there. I'm actually waiting for price to tell me that it wants to reverse. If it's not telling me, I'm not touching it. There's no idea, no use for me to be taking something that the market clearly is telling me is not reacting, right? If it is going to respond from this area, right, it will tell us. It will show signs of rejection. It will start forming bearish reversal pattern, or I mean bullish reversal pattern in this case. Let's see. And that reversal pattern can be, right, this is the neckline currently on the 1 minute, right? So this could give me another signal. One signal is based on that order block, right? That's one signal, which is from the bigger quasi, right? But here we can have another quasi being printed, right? And that's why I have a lot of times I have more than one entry on one setup, because this can form a new quasi. And if it does that, it comes back, I want to be a part of it. I would be entering something like this, wherever it puts the and then I'll be targeting the first. You see that it's already 6-1. Let me put it a little bit wider just in case. It's still 1-4. And if I go for the bigger move, right, I will be doing something like that, which is, up around 6. And this is without using the daily. Sometimes I have the daily, and then you can get funny with you can start targeting things way higher. And those are the nice ones to catch, but they don't come as often.
Okay, so I have a question here. You know what? Let's go through the questions. We got a few good questions here. So, how long did it take for you to get your trading psychology together? I just bought Trading in the Zone. So I think yeah, I think uh, Trading in the Zone is a very good book. I think that's where you know that's where I started understanding what trading psychology was all about. But I also feel like while I'm very big with trading psychology. I always say like trading psychology should be your number one focus. It's very important to focus on trading psychology. I also think that a lot of traders over overestimate the importance of trading psychology without realizing that trading psychology comes when you have a solid strategy. Like if you don't have a solid strategy, if you don't have a statistically proven system, like a system that you know is profitable, then you cannot have the confidence needed to even think about trading psychology. Uh, without I mean, yes, you can be trading discretionary, but even if you're trading discretionary, you still have a system and you still know what to do in certain scenarios and you're confident in your abilities to do so. At that point, that's when trading psychology becomes important. So I would say that it took me as long as it took me to create a profitable system, really, because at that point is when I started applying the idea of, especially what Mark Douglas talks about in Trading in the Zone, where he talks about how you're supposed to be trading like the casino operates and not how the gambler at the casino operates, right? So you have to look at one trade as a completely, I mean, the thing is, trading is all about taking individual trades where you have a completely random outcome from that individual trade. So if you take one trade, the outcome of that trade is completely random. But then you take that trade and combine it with 100 of your next trades, then there's a pattern, right? So you have to be consistent with risking money on random occurrences, but that will create a consistent approach long term. So having that mindset of probabilities is very difficult, but it it's almost impossible if you don't have a profitable system and a good structure to begin with. So I know that I do tell everyone like, okay, get Trading in the Zone and then you get Atomic Habits, and then you combine the knowledge from those two books, and that's all you need to be, with trading psychology to be a good trader. But without a system, it means nothing, you know. So
Very good answer.
I think to really answer your question there, it's going to take as long as it will take you to create a profitable system, basically. I think when you have a profitable system and you have the confidence in that system, and especially if you have a systematic approach, training psychology becomes of less importance. But definitely, yeah, I'm kind of like just rambling on here. Let's go on to the next
No, it
question, unless
is.
you have something to
No, no, it is. Without a system, you have nothing to look for in on the market. It's simple as that. If you don't have a
yeah.
system, you still have to have the system first, and to the degree the system is profitable, your reliance on your psychology or the less the psychology is important. But of course, I mean, there are different degrees. I mean, you still have to have a sound based mindset, and but I mean, it's less dependent on how well you can, as long as you don't auto sabotage the system. If you have a very good system with a lot of profits, you can get away with a lot more errors on your side on the psychological part. But typically, that's the difficult part. Systems don't
Yeah.
typically have a lot of profitability, so we end up in the end depending on not only the system, which without it you don't have anything, but also on you executing it at a very high level to be extracting that edge. So I think what you said is on point.
Yeah, and like Alan is saying here, the important thing is to always stick to your plan. But that's what trading psychology is all about. how are you supposed to be sticking with that plan? Because a lot of times um, we'll make decisions that are outside of that plan. And trading psychology is all about making sure that you stick to the plan, and that's easier. I mean, it's easier said than done, and that's why trading psychology is so important, because we have, like, it's the one of the most difficult thing in trading is to actually sticking to the plan, and that's why trading psychology is so important. Um, let's see. We got another question here. I think someone with a $200 account. What advice on flipping will you give that person? Um,
I'm
yeah,
not too fond of that
I've
idea.
never. It's a very. I think that's a bad idea.
Yeah.
I think if you have $200, get an valuation account, get funded, and make money trading the right way, instead of most likely losing that $200 because you're trying to, flip an account. I mean, what does that even
There
mean? If you can flip a $200 account, why not flip a $200,000 account?
that's what I was
Um,
gonna say. I mean, you should be trading at every moment of your trading journey as if you already have that 1 million capital under your belt. And would you be
yeah,
flipping a $1 million account? Would you be risking, taking that kind of risk to make it two in one trade or a couple
definitely.
of trades? So you're not gonna be doing that. That's not responsible. I mean, who does that? That's the
I do.
uh, it's not incentivizing proper risk management where the account is very important, right? If you flip, it sounds to me like you're willing to take the risk of losing the account, to double it, and that shouldn't be part of the equation when you're trading. You shouldn't be willing to lose the account. Period.
I have
You
a
should be.
I have a very good question here. Okay, should I start learning ICT from the 2022 mentorship playlist, or do you recommend me to start with something, or something else to start with? Okay, so there's this idea in the world of trading that there's only ICT. I mean, it's like, oh, you're gonna start trading. Okay, just go to ICT YouTube channel. So the thing is with ICT or my system or Victor's system or whatever name your favorite guru or influencer has, then used their system, is we're all trading technical analysis. So if you want to learn how to trade using technical analysis, you need to first learn the fundamentals of technical analysis. I would not recommend that you learn how to trade technicals by first going in and looking at a specific trading system, okay? Because that person who has developed that trading system has most likely done so on the foundations of technical analysis. So if you truly want to understand the trading system, first understand technical analysis. What I would recommend is, and it's completely free, is babypips.com. Okay, so babypips.com has a really good introductionary course to Forex trading and the basics of technical analysis. You take that and then you start building on that. If you want more knowledge based on that, you go into YouTube and you search for things like how to use a trend line, how to add horizontal levels, what's market structure, what's a breakout structure, all of that stuff, right? Another very good thing I would recommend that people do, it's quite expensive though, but if you have the money and you have the time and you're really invested into becoming, making this your future, then I would recommend CMT. Having, reading the CMT books and going through the CMT curriculum will make you an expert at technical analysis, and then you can create a system based on that. Okay, that's what I recommend that you do. I honestly would not recommend that you go straight into whatever, ICT or some other influencer. I would not recommend you go and check a specific system. You still need to understand technical analysis, because all ICT is just technical analysis, just like they teach in Baby Pips or CMT. And then he, just change the words of it and say like, oh, this is This is not a break and retest of a naked level. This is a first retest of an first value gap. It's just different names for the exactly same things, just package it differently, and then a lot of people sell that. So the CMT book, just Google CMT, right? What else? We had a question here. Yes, there's also, we had another ICT trader on here with the live stream. It's called the OTE trader. He trades ICT and he's quite profitable doing so as well. So what I'm saying is that I'm not saying that ICT doesn't work, but what I'm saying is ICT works very well if you know what it's based on. If you know technical analysis, basically. It's very important. Let's see. And I'm not
Against him. You're not against him. Not at all.
Well, I'm not going to comment on that, honestly. Like, I feel like it's a discussion for maybe like a private discussion, but honestly, I feel like this industry has a lot of issues. This industry has a lot of issues, and there's a lot of fake people out there, and I don't like it. If you want to learn technical analysis, you go to the source. You go to the source and you try to figure out what is technical analysis, and then you build the system from that. Like, it's simple. You have an idea, you test that idea, you get a statistic. I feel like people who just want a system, they want a system because they want something that someone else has already tested and created. But guess what? Even if you buy a system for someone else, you still have to modify that to your own personality and your own trading style, and you have to do the same work that they did when they developed the system. There's no easy way to say this. There's no easy way to do this. You have to put in the work, even if you spend thousands and thousands of dollars. If I'm going to be honest with you guys, I probably spent like 10K USD on trading education. Okay, that's a lot of money that I've spent on different types of education. That includes CMT. It includes different courses from different people that has, verified track records. So, that's a good thing that you might want to look into. Does ICT have a verified track record? If yes, then absolutely go ahead, get the course. But it's important that you guys understand that it's much easier to make money selling a course than it is to trade, and that's just the truth of the matter. So be very, very careful when you're out there and spending your money on products in this industry, because trading is one of the most difficult things you can ever imagine, but selling a course, not as difficult. Okay, so please remember that. Let's see. I got a quick question here. How common is it to have a negative month? I think it's very, very common. I think I would say that I'm not going to say that 80% of your month are going to be negative, but I'd say that around 80% of your trading will probably, I'd say somewhere between 70 and 80% will probably be, maybe around break even, and then you'll have like 20 or 30% of your trading year that's going to make you most of that money. It's sort of like that 20-80 rule, where 20% of the time makes 80% of the profit. I think that's a good way to look at it.
I got an answer to chip in. The number of the percentage of losing months depends on the number of trades you have per month. The lower the number, the more likely that randomly you will have a losing month. Not that your system is losing, but just that since you don't have a lot of trades, they may randomly have a couple of losers, and that will be enough for you to have a losing month. And that's one thing. So the number of trades, and the other factor that decides whether you will have how many losing months you will have is how profitable your system is. As simple as that. If your system is not profitable, all of your months will be losing months. And if your system is very, very profitable, it's very likely that you're not going to have any losing months, right? So it depends on the profitability of your system and how many trades you have typically in a month.
I think this is a good question here. Is it possible to become a profitable trader even if you don't have a mentor or you can't afford to have a mentor? Yeah, absolutely, 100%. 100% is it possible to become a profitable trader without a mentor. Now, I'm saying this as someone who's actually mentoring people. Uh, I would say that yes, it's absolutely 100% possible to become profitable without a mentor. The thing is, uh, if you have a mentor, it's just going to go quicker, most likely. That's the truth of the matter. Because that mentor can give you tools. Like for example, we talk a lot about developing systems, and to find out if a specific pattern, what specific statistics that pattern have, you need to have a structure and tools to make sure that you can collect that statistics, and having someone giving you those tools, which is also available for free out there. But I think when someone gives you a structure, it's much easier to learn if someone says, okay, you do this, and when you're done with that, you do this, and you want to focus on that. Like, it's obviously easier. But again, if you can't afford a mentor, YouTube. I mean, YouTube. Go Baby Pips course and YouTube. If you if there's something you're thinking about, use Google, YouTube. You'll everything's for free out there. Everything is with YouTube. You can become an expert at pretty much anything, is given enough time.
Yeah, that's true. The benefit of a mentor is that that person can see through your blind spots, right? That's
Yeah.
something that takes a lot of time if you're only depending reliant on yourself to spot your blind spot. But that's very difficult because they're your and they're blind spots, so they're not going to be easy to spot. And they will be able to tell you right away, don't lose your time doing this, A, B, C, go ahead and do M right away, or whatever. That's the added value of a mentor. But you don't have to have a mentor to reach profitability. It's only probably going to take longer than if you had one, a good one, by the way, not just anyone as well. And even if you have a mentor, the mentor cannot make you a trader. You have to put in the work, so it still depends on you, doing the work. The mentor will only tell you how to do it, but you have to do the heavy lifting anyways. So
Yeah.
having the mentor is not going to save you from, guarantee you anything. If you don't put in the work, you might as well not have the mentor at all, because it's not going to make a difference having the mentor.
Yeah, I think I've mentored a few people, and the ones that have had, I've helped people, go from not knowing a lot about trading to getting funded. And I think one of the one of the what I see from the successful ones are the ones that really put in the work. Like, when I tell them to like back test, they're not just back testing 10 trades. They come back a week later and say like, yeah, I back tested this pattern 100 times. Like, I've spent the whole week just going through this. Like, those are from my experience, those are the students that really make it and make it big. Then you have students who are like, I don't really have the time. I can't do this. I'm not ready to put in the work. Well, so it doesn't really matter if you have a mentor or not. You still have to be ready to really, really put in the work and really, educate yourself. I don't believe we have anyone who's a chartered market technician. I'm still working on CNT1, but honestly, with that, that's definitely for me. That's a time. It's just an issue with time. I don't really have the time to commit to doing the exams at this point, but
We, we
I
don't
do
we don't
have.
have any we don't have anyone chartered market technician, but we have a masked market technician. Does that count?
That's a good one. A good one. I have a question from Andre asking how many pips I have in drawdown for my winners. So I'm gonna look into that for you, and I'll show you soon when I have that number. But we can go through another question while we wait. I wanna I want to make sure you guys remember about the likes as well, because we do have 60 more likes before we initiate the giveaway. There is a chance that we will not initiate the giveaway if you don't hit that 200 likes. So just make sure that you check that out, and make sure that you click that like button. Let's see if we can find the question while I go through my journal to find that. This is a good comment, though. I really think, because the things that make you make a good trader, it's definitely things that also make you a good person. So you need to be, as a good trader, you need to think in terms of probabilities. That's definitely something that will help you in everyday life. And more importantly, you have to be able to manage your emotions. Very important. And with that also comes patience. And you also want to have the discipline necessary to do what's necessary. So yeah, I think the criteria to become a good trader is exactly the same criteria for becoming a better person. And for me, it goes hand in hand. And the more I learn about trading, the more I learn about technical analysis. It has really helped me in my everyday life as well. Before I traded, maybe I wasn't as patient as I am now. Trading has definitely helped me with that.
Yeah, trading is a reflection of everything else. So if you're not good in everyday life on waiting on for something, you're impatient, you're probably going to be the same trading. So it's a reflection of how you are outside of trading. And if you improve things in trading, as Jonathan said, it's likely that you can use the same tools, the same insight, that and also apply it to other parts of your life. For example, being organized, right? If you're not organized in your trading, it's going to be difficult. If you don't have a routine, if you don't have good habits, and all of those things you can apply to the rest of your life as well. So yeah, I think it can even change your life, not because of the profits potential, but also change your life because you grow as a person.
Okay, so I did find the graph here for my drawdown. Let me show you guys this. This is referring to that question right here. So you can see that my average drawdown on my winners is minus 33%. So somewhere around this level right here, as you can see that my winners, or my up draw is the green bars, and my down my drawdown my drawdown is the red bars, and the dots here is where I've exited. So you can see that all of these black dots here is where I've exited at a profit, and you can see on the winners where you had the drawdown. And one thing that's interesting is, most of the time when the drawdown on my winners, or on any trades, goes below 50, so minus 50, it usually hits stop loss. You can see this one right here. It has only not been true once, twice, three times. Only three times has that not been true. So when I say I have a low drawdown on my winners, this is what I mean. Usually what happens is I get filled on entry, moves a little bit lower, and then it starts moving up into profit. You can also see that the same thing is true for trades that get above 50% in updraw. When they get above this 50% in updraw, those trades are, in all of cases except one, does hit that final TP. Now it's not as easy as just looking at this, because we don't know how price moves. It might move up here and then down here and then back up again. But it's definitely interesting statistics. I can't find the pips though. I don't know how many pips price goes against me, but on average it goes against me 33% of the time, which is also, if I'm going to be analyzing this closer, it could be could be telling me that I can also limit my stop loss a little bit, but I don't know. I really like the way I'm trading now. I think my approach right now works very very well. So I'm just going to continue doing that. But you can also see at my exit analysis here that I need to let my winners run a bit more. I do exit my losers in a fairly good uh, area, but my winners I need to let them run more. Okay. Yeah, and we had a breakout on ADNCD here as well. So you can see I showed you the daily here, and I said I want to go short if we move lower, or I want to long if we have a break and retest here. So what's happening right now is we're breaking out on ADNCD, which means my short idea is perhaps about to get validated, but it's way too close for that to happen right now. I want to have a price structure that looks like this high, or this high prior to entering the trade. So I'm perhaps looking at something like this, where price comes up here and then forms that rounded top, comes down for retest here, and that's probably when I'm going to be looking at entering this trade. So I'm probably going to be waiting for the daily candle to close. If the daily candle can close perhaps a little bit higher, it confirms the breakout, and I would then be looking for a rounded retest down to perhaps this level before going long. And I think right now ADNCD is the only trade. Let's move that up here as a priority. Euro NCD has not broken down yet. NCD CHF that's not the trade anymore. USD JPY. USD JPY is actually, yeah, we might have a trade here. So let me break this down. USD JPY is at this support level right here. You can go to the weekly as well. You can see that this is a major support level for me. Price has had a major move to the downside, hitting this support. And I want to see at this point, I would love to see this daily candle close as a bullish engulfing. And then on the 4-hour, we have this structure. And I want to see a break and retest of this level right here. Okay, so break and retest of that level, I would be taking a trade that most likely is going to look like this. I think that is almost picture perfect, where you have that that rounded bottom and the breakout structure at a high time frame level. So if this trade confirms like this, then it's a pretty much a picture perfect trade setup of the way I'm trading.
Nice. And this is dollar yen.
Yeah, exactly. Dollar yen.
Yeah, okay.
Okay, let's see.
Good
what else
stuff.
do we have? Yep.
We have the news came out, and so far it hasn't been able to go below the order block, the H4 order block. If I may put my screen on, if we zoom out for the last couple of minutes, I was looking to the minutes. We do have a bearish order flow on the hourly, so that looks like it wants to break that structure. It is a 1 hour order block, so that is it's not something you want to be seeing. If you see a order block, a bearish order block, right, fresh, and the market is telling us it wants to go lower. However, after the news, we are still the news was within this candle, right? It's still after the news. Let me see, that candle was that's not completely true. Let me change this to some time where I'm. All right, so this is ended after the news, and it did end with a bearish engulfing after the news, 30 minutes after the news. So that tells us that at 30 minutes after the news, the market was still trying to go lower. That does not, since I'm trying to go long from this area, that it does not look good, right? You don't want those signals to be, you don't want the market to be signaling that it wants to go lower if when after hitting that this order block, right? We have these areas, these demand areas. What you want to be seeing is as the wick is being formed, price comes in and then it goes up and closes much higher, not forming a bearish order block. So as I said, that's not something we want to see, but you know, it doesn't change the trade plan. The trade plan doesn't say we have to look for that invalidates the trade already. What we do see is that this is the candle of the news, right? That is the candle of the news. This big this big wick here. So far, that candle and any candle afterwards has not been able to violate to squeeze this order block, which is the demand area. So that still is looking good for any trades taken or to be taken from this area, and targeting structures above, right? Either the top of the structure, and I say top, even though the head is below us, right? This would be the first TP. If you have a signal, and the next one based on the ATR, look, we are on GU right now. The next one on ATR would be at around 76. So it'll be something around here. Let me get this, something around this area. And we don't have any structures. Oh, we do have. Look at that. We do have a structure here, which we can use as let me see. That's the relevant structure. You can even accept that the whole order block there, even if it's not a fresh one, as structure, a relevant structure. And depending on your the time of the day, how many days you have left, how many hours you have left in the day, you might say, well, I'm going to go for when it breaks that, when it takes out that high, or a more conservative is I'm going to be below those structures, right? Either the previous high or the order block that I just mentioned there. And those are going to be the TP for this day, right? Since we don't have anything on the daily, right? You don't have a daily order block. If anything, we have a bearish order block, right? But so we don't have a bullish to have this long trade be kept open until the end. So those two trades should be hit either, those two TP should be hit today, and otherwise you should make a data-based decision whether you're going to let them overnight or not. But I wouldn't recommend that, since well, there is a case to be made since we are in a bullish market structure. So that helps you by leaving it on is not such a bad idea. But remember, we have a lot of high impact news this week, so be careful if you're leaving anything open for the next day, because things can change completely the very next day. And we see on the lower time frame, this is interesting, guys. I don't know the results of any trades taken from this order block yet, because simply we don't know how the market will respond going forward. But so far, what do we see on the H1? What do we see in terms of, this is the first quasi line. It takes it out, goes back, and has a bullish engulfing. Makes a higher high, comes back, and it does not break this order block. See that? It doesn't close below it. Those are the indications you want to be seeing. This is only the 1 minute though, so it's not, doesn't mean it's guaranteed to go up from here. But what it does next, it goes up. It doesn't take out that high yet, but it is making, if it takes this out, this will be a higher low. And that is exactly what we want to be seeing. We want the market to be switching back and making these kind of moves. And it's not there yet. It hasn't printed yet, but it looks, if you look at a 5 minute, right, we had a bullish order block here, right? This is the, let me mark it. You have a bullish order block here. What does it do? It comes back into that order block and forms another bullish order block on top of it, right? That's bullish order flow, right? You want to be seeing this. It needs to be showing this if it's going to go up. That's the 5 minute. This is also the 5 minute, right? Whether that's going to continue to do this, I don't know. We'll have to see. But this is the price action you want to be seeing as the market is moving away from it. And by the time it reaches this, it's going to be obvious for everyone that it bounced from this order block, right? And by that time, more people will go into it, and it will be, have a very obvious market stretching going up. But this hasn't happened yet. So this is not, projection of what will happen, but just one possibility. If the order flow continues to build up from 1 minute, 2, 3, 4, whatever, 5 minutes, this is the 5 minute telling us that, it wants to go up. But it needs to do that on the 15 minute as well, right? Every time frame, it needs to be showing us the same pattern. If it's going to reverse, it's going to have that, not necessarily every time frame, but it needs to be doing it on the 10, and maybe it will skip 15, it will do it on the 20, and etc., as it is moving out. And this is the point where from the news, it needs to take out. That's the high of the news, the wick. If it takes this out, and then it means that the news is, wasn't able to push price lower from its release, and it's likely then to continue its path it had before, which was continue bullish order flow, and it's likely to be going up again. But those are the indications or the tests that we need to wait for the market to see what it wants to do. Our job is not to predict, it's just to wait, read, and act. That's it.
All right, I want to go through some questions here. We have, I think this one is quite good. So my heart wants to quit, but my mind wants to keep pushing. Been trading for 1 year and still no results. Please, I need advice that will help me overcome this. I think, I've been there myself. I've definitely been in a situation where I feel like, is it worth it? Spending countless hours on this, just doing the same things over and over again. So when it comes to education, it can, you've been trading for a year, so I do suspect that you have a basic understanding of technical analysis. So maybe your problem at this point is the actual trading part and executing your ideas based on your knowledge that in technical analysis. And so when I started trading, I felt that it was very overwhelming with all these technical analysis courses and educational material. But I did find a process. I did have mentors when I started as well, which really helped me. But the real problem began, I'd say 1 year in, when I actually started trading for real, and I kept making the same mistakes over and over again. I think that was my biggest problem. Like, I was over trading, I was making money. I had a winning week, and then the next week I gave it all back in 1 or 2 trades, and I kept repeating that over and over again. So what I had to work on was just my trading psychology. But you're going to feel that frustration all the way up to you reach that point of profitability. So you have to just keep pushing through. You have to be resilient, because right before you become consistently profitable, you'll still have that frustration, and then one day you'll wake up and you're like, all right, it's working, it's actually working. You've been profitable for a week, 2 weeks, 3 weeks, 1 month. You're following the process for 2 months, and then all of a sudden it's been 3 months. You're like, wait a minute, I'm actually doing this. I'm doing what I'm supposed to be doing. It's I think it's like when it happens, it just clicks, and you're not really sure exactly what made you go into that realm of profitability, but you need to push through. You need to have that resilience, because if you give up, you're never going to be able to. You're never going to get that feeling. You're never going to be able to know what it's like to be profitable. 1 year is nothing. 1 year is nothing.
Yeah, I was gonna say that 1 year is a good amount of time, but in terms of your journey to profitability, you just started. I mean, it doesn't, and even 1 year doesn't tell us how many hours, because You can be spending 1 hour a week and 1 year, and that's not a lot. And you can be spending, 8 or 10 hours a day, 5 6 times a week, and it's same year but different amount of hours put in. That's something as well. And the other thing is, you say you want to, your heart wants to quit, and your mind says you have to keep. Why your heart? Wouldn't it be your mind wants to quit because you don't see
Yeah,
the
because if
logical
your heart
results?
wants to quit, then you, I mean, if I would be in that situation, I'm like, my heart wants to quit, but my mind wants to keep pushing, I would probably quit, you know. So for me, the thing is with me when I was trading, it was, you know, obviously the other way. My mind is telling me like logically, you're just making the same mistakes over and over again. You should just quit. But there's something, you know, there's this, I always had the feeling that I'm so close, you know. I'm just so close. I can just, you know, touch it. You know, it's almost like I got that invisible thing called profitability, and it's just always so close. It's always one trade away, you know. And but my brain told me like, well, you've been doing this for 1 year and you're still not profitable, maybe just quit. And then you have to think about what else are you going to be doing? Okay. So, all right, you want to be making money trading, you know, what else can you do? Okay, you can go to university, you can get a education. Okay, let's go to school and get an education and get a job based on that. How long is that going to take you? Well, that's going to take you at least 2 years. I mean, I don't know what you're looking to do, but it's going to take you at least 2 years, maybe 1 year, but there's not a lot of good education out there to get a job with 1 year. So at least 2 years. So at least spend 2 years trying to trade. If you want to make a lot of money and you want to go into a field where there's, you know, you're highly educated and you want to make making a lot of money, we're talking about at least like 4 or 5 years in university. So at least try to spend that amount of time in trading before you go on to other things. 1 year, again, you've learned the basics. You've learned the basics. Now it's time to go into the advanced stuff. All right. What else do we have? What else do we have?
About the before we move on from that question, I don't know what this user means by the heart and the mind, but of course I would think heart, emotions, mind, logic. But if that's the case, you have to ask yourself, because trading, well, I don't know for everyone else, but for me trading is not necessarily, it is a job, yes, but it's also a lifestyle, in the same
Yeah.
in the idea that I don't do this. Well, of course I do this, to for the monetary benefits, of course. But if, even as Jonathan said, even when I don't need that anymore, I will still be doing this because I love doing it. I enjoy doing it. So if that's the case, then my heart tells me keep doing this. My emotion, my passion is keep doing this. If you feel you should not be trading because it doesn't feel right, you don't enjoy it. um my question is, if that is the case, which I don't know, but if that is the case, you should think hard. If you want to keep doing something that you don't enjoy, I mean, life is short. We should be doing things that we enjoy mostly, if we can. Sometimes we don't have a lot of choices, but if we do have the choice, it's much better to, do something you enjoy, even if that's, it doesn't earn you as much, but at least you enjoy life, you'll be happier, and everyone around you will be for you as well, I think.
All right, just so you guys know, we got about 40 likes left before we initiate the giveaway. Before we move on, I just want to quickly mention. I'm not sure if you had anything you wanted to show on GBP right now. No.
Not really. Well, the reversal on this is the 5 minute quasi, and it hasn't been triggered, right? And you want to see it triggered. It has to trigger first before at the entry order block becomes valid. That hasn't happened yet. We did have on the 1 minute, we did have a entry, not an entry, but a let me see, we had a quasi, which on the 1 minute is being validated. If it just closed. So on the 1 minute the setup is broken. The 5 minute is still, well, looks like it's not going to be reversing from that area. So if that closes on the 5 minute below that, this area within the two yellow lines, then this whole area is off the table as a reversal um, point of interest or area of interest, and we can now see that is firmly squeezing that area, and we're not going to have, well, there is a possibility in the next couple of bars if it reacts quickly and leaves a pin, a wick below. But given the price action right now, it doesn't seem to be reversing from that area. So automatically you wouldn't be having, when the question is, for example, how does it react when it gets to that area, right? When it gets, look at that, these are clear bearish bars telling us clearly that it does not want to do that. So if you haven't had a signal before, in any case, this is not going to signal you to get in. And that's what I mean by waiting for your trade to signal. And sometimes it signals and then breaks, and that's okay as long as you're following price action. That's the only thing I have to show on EU. It is still in the same area, and we'll have to wait to see if it's going to uh, respect the area or not, and reverse from here or not.
Yeah.
That's
Okay.
it. I don't have.
Okay. What did I want? What I was gonna say something. I was gonna. Yeah. Okay. Yes. Exactly. That question we had. What was it with the? Okay, this one right here. So, good question. And first, I want to say, I'm not really sure exactly at this point. I'm not following any specific rules when adding horizontal levels. I did when I learned how to add horizontal levels. Now I just add the level based on the visuals, based on what I'm seeing in the market. You could say that I'm adding it on, discretionary, but I'm not really doing that. I've learned how to add horizontal levels with very specific rules. And because of me repeating that over and over and over again, it has now become almost intuitively. So I add a horizontal, a lot of times I don't even have to add the horizontal levels. The only reason why I have horizontal levels on my chart is to show you where my level of interest is. If I would not be doing these live streams or sharing, screenshots of my charts, I would not even have horizontal levels on my screen because I know where they are. So there are a few guidelines when adding horizontal levels, and it's one of the first guidelines I would say is just keep it simple. Okay, I look for key levels in the markets. I look to add horizontal levels where price has. I mean, it's very simple. A horizontal support is where price have historically shown, bounces. When price reaches that level, you'll have buyers coming in. So we can, for example, just look at this level right here. If I'm going to be selecting the horizontal line on that wick right there, you can see that this has been a level that historically has had strong reactions. You can see right here, you had one reaction right here. You have it's been used as support right here, and obviously a very strong reaction on that one right there, and this one, and that wick, and this wick, and right here. So obviously this is an important level because this is on a daily. It's visible on the higher time frames, and you've had a lot of touches. Normally, what I do is I look at this level, like this is the uh, the most important level, but I usually just add a zone around this level like that, because with horizontal levels, it's not just about the exact price or the exact level. It's more about the area around that level. There are a few key points that you want to remember. You can't just add levels on like every possible level right here. Otherwise, your screen would probably look something like this. You have one here, and then you add one right there, and you have one here, here. I mean, this is it's too messy, and I think this is why a lot of people are wondering, like, how do we add our horizontal levels? Because maybe when you're starting out, you're just going to be adding every level, and your chart's just going to look like this, and it's just going to look crazy, right? But what you want to look at is Okay, the number of touches that that level has had and the time frame that that level has been in play. If it's a level that's been in play for 2 years and it has multiple touches, both as support and both as resistance, um, then it's a good level, right? So if it's been a level that's been in play for a long time and has multiple touches, it's a good level, and also the strength of the reactions to that level. Okay, and when I say strength, I mean what happens when price breaks through the level and what happens when price is testing that level. So we can look at this level right here. When price breaks above that level right here, you have a pretty strong reaction. Okay, so if you go in here, you see that when price breaks through this level, you have a strong breakout, and that breakout continues. There's a lot of momentum in this move when that level breaks to the upside. You can even look at this trend right here. Here you have one trend. Okay, this is one trend from the low to the high. One of the strongest point of this trend is from this low to this high when it breaks that level right there. So this tells you that this level right here is obviously stronger than this level here because this breakout is not as strong as this breakout. So you can look at the strength of the breakouts of the level will also determine the importance and the strength of that level. And also the touches of the level. How strong is this level as support when price is bouncing on that? Well, look at this one right here. It comes down, it tests that level right here, and this is an incredibly strong move. Incredibly strong move. It moves from this low all the way to this high before even putting in some type of low time frame break of structure. And this is just consolidation, right? So it's very, very strong move right here. And then we come down and we see that when price breaks this level to the downside, it's a strong move. And well, now the most recent price action not really telling us a lot about that level, but that's usually what I look for, right? You look for key swing points in the market. You look for a number of touches. Has it been visible on the lower time frames? How long has the level been in play? And the strength of the breakouts and the strength of the bounces or the rejections. Now, another key thing I do when adding levels is I try to focus on not. Sometimes I include the wicks, but the extremes of the zones are usually created based on candle closures. So, if I'm going to be adding a level based on that bounce, I will be using the rectangle tool in TradingView, and I'm going to be going from that candle close right there down to this candle close right there. And then that horizontal level comes in almost at the very middle of that zone. Can also use the candle closures of that one right there, and now it's almost better. And then I try to adjust the level, see how long has this level been in play. I'd say it's been in play for quite some time. You can also see all the way back here in October 2022, you also had fairly good reactions to this general area right here. And that's basically it. This level at the bottom that I've added, I've basically just added it based on, let's see. I think I added that one based on the weekly. Yeah, so I wanted to make sure that I went on the weekly and I wanted to make sure that the top of that zone is going to be these weekly candle closes right here. And then I really like the fact that you have this structure right here. So I wanted to incorporate the low of these candle closers because it also incorporates that level right there. So you can see that this zone on the weekly forms a very good level. Another tip that I highly recommend that you guys try out is switch to line chart. So if you have a chart like this and you're not really sure where to place your horizontal levels, switch to line chart and it becomes much, much cleaner. And now you can use the lows and highs to mark out your levels. So here, for example, what I would probably do here is connect that one with this one. Okay. And now what do you get? If you move back to the candlestick chart, you're getting this level, the exact same level that we've just added previously. I think I might have included some more levels, but it's pretty much the same level. So that's some tips for you guys. But what it all comes down to is adding horizontal levels is subjective, and there are some rules that you can follow, but at the end of the day, your horizontal levels will not look the same as exact the same as someone else. I also have an indicator here which automatically adds horizontal levels, and we'll see. The indicator might add a completely different level than the level I've added here. So let's see. Well, actually, it's very close. This one right here, but it's not perfect. It's not exactly the same level as I would have added. And then above here, you have a level, and that's also not exactly the one I would be adding. So remember that it's your horizontal level will not look exactly the same as someone else. We're getting a lot of comments here, a lot of
But I think
questions.
that's someone asking the name of the
What's the name of the indicator? Which indicator? Are we talking about the
one
horizontal one?
level. I think, yeah.
It's called. I think if you go into indicators and you search for SRMTF, you're gonna get it right here. Support resistance channels by lonesome something. So you go in, you search for SRMTF, and you'll get it. But just a word of warning, I wouldn't recommend using it. Okay, like I would not recommend using it. And if you do use it, you have to only use that indicator, and you can't add your own levels because you need consistency in your approach. You can't. Some trades decided to use the levels of the indicator, and then yeah, the one who created this indicator, by the way, yeah, he's definitely a legend of TradingView. The indicators that he has done for TradingViews is amazing. But like what I'm saying is, if you're going to be using this indicator, that's the only one you're going to be using when trading horizontal levels, because otherwise you're not consistent. You can't decide to sometimes trade the levels and sometimes not trade the level, and that's the reason why I've decided to stop using that indicator, because I believe my levels that I add is better for my system, because that's the levels I've already been using.
Yeah, that's a good point. Consistency is very, very important, because if you don't have consistency, you're not likely to be able to repeat whatever you've done. And if you
Yep.
can't repeat it, what's the use? I mean, if you reach, you pass phase one, great. Yeah, but if you can't repeat that, what's the use? There's no use. It's going to be happy for that one event that you can't repeat anymore. And in trading, one single event is okay, is important, but the the success is being able to do that repeatedly, consistently, day in, day out, and if not every day, then at least every week.
Yeah. All right, let's see if we can get, while we wait for the likes to come up, we have about 21 likes left before we initiate the giveaways. We're a bit low on time, guys. We're a bit low on time, so make sure that you click like if you want that giveaway today. Okay, so what else?
Everyone needs to go tell their neighbors to hit the like
Yeah.
button.
This is a good one. In your early days, how did you get rid of all your bad habits like impulsive entry, FOMO?
Yeah,
Well,
I think
in my early days, I
that's a
didn't get
very
rid of
deep
them.
one.
Yeah, and I mean, in my early days, I did not get rid of them. That's the problem, you know.
Mhm.
And that's why I guess those are the early days. But how did I overcome that? Okay. So I still make mistakes. I still take bad trades. I still have weeks that are not profitable, but they should have been, you know. I do take setups that are not part of my system. I still have periods where I'm not managing my emotions in the correct way. But what I can tell you is whenever I make a mistake, I know what to do to fix that. If I make a mistake, I make sure I do something about it. And that was really the turning point for me when I decided to not just say, oh, I made a mistake, I entered this trade, I'm over trading. But instead of that, I say, yesterday I over traded. I took 2 minute trades, and this is my plan to fix that. This is my plan not to do that next week. So last week, I did exactly that. Last week, I made a couple of mistakes. My week last week, I was down 1.5 R when I should have been up 1 R. So I made some mental errors. I took some bad trades, and I was over trading. I took, I believe, 5 trades. On an average, I should be taking 2 trades a week. So I was over trading. And I realized what I've done. I went through my journal. I looked at my trades. I realized exactly what the problem was. I entered before the close of the 4 hour candle. So now this week, I've only taken 1 trades, and I have a very clear structure on what I need to do. I know exactly what I should be doing moving forward. And I think that's really where everything changed for me when I made sure to have a plan to fix any mistake. Because if you make a mistake and you can't fix it and you don't have a plan to fix it, there's no point continuing to trade until you figure out how to fix that problem. And a lot of times the solution is much more simpler than you think. It all you need maybe is just 5 minutes of meditation, or take a 2 minute break before you enter a new trade and ask yourself, is this a trade that tomorrow I'm going to tell myself that it's a good trade? Ask yourself before you take a trade, ask yourself, is this a trade I'm going to be proud of when it hits stop loss? Things like
I
that.
think
You have
that's
to have a structure.
Yeah, I think that's powerful to think yourself, to imagine yourself, your future self watching this trade, watching you doing that trade. Would you have, what would your future self say about that trade? Right? Because you have to detach yourself from your current position, your perspective, because in the present we are subject to our emotions, our impatience, our greed. And if you do that mental game or experiment to think, okay, how would I, if I would look at from a third person or from a future self, how am I going to assess this trade? Is this a valid trade, yes or no? And that may be all you need to be to assess that better. And I have another analogy, uh, and what you're saying is, Jonathan, that you have a way to correct, mistakes that you and we all do still mistakes. We're not robots, but um, one of the analogy is it's like driving, right? To me, my trade plan is those lines of your lane when you're driving, and your job as the driver is to maintain yourself within those two lines, and that's how you maintain yourself. You correct yourself. It's by making those little minor correction on your steering wheel, as you see that you're deviating a little by little from the lane. You're getting close to one side, and you correct yourself. You put yourself back into the middle, and that's, I think that analogy, to me at least, is similar to how I vision myself, how I view myself, because we're all humans. Your next action, your next trade, you are all that the next error is right around the corner. So you have to not be afraid of it, but be aware and cognizant that if anything happens, you deviate a little bit, correct yourself right away before you continue. And that's exactly what you said, Jonathan. So I think it's a very powerful a statement right there, and tip for everyone.
Yeah, definitely. We have
Nine
another.
likes to go. 9 likes to
Yeah,
go. Come on, guys. You
awesome.
guys can do it.
Do I keep a physical journal or a app? How do I structure your journal for easy review? So I combine a physical journal. So first of all, I have a physical journal that I write in. I try to write in it every day. So every morning I have a routine. Again, talking about the book Atomic Habits, where James Clear talks about habit stacking. So I have a couple of habit stacks that I have, right. So one of them is every evening I take my journal and I put it on the dinner table where I'm having breakfast. In a table where I'm having breakfast. That sounds weird, but yeah. So I take my journal, I put it on a table where I'm having my breakfast. So every time I sit down to have my breakfast, I have my journal next to me and I write in that journal. And the next thing I'm doing is I, take my son to the bus and then I go down to the office and I meditate. But because of the fact that the next major thing that I'm doing after writing my journal is to look at the markets, right? Look at the markets, do a market scan. Then, of course, a lot of that time spent in a journal in the morning, which is about 5 to 10 minutes. I write a lot about trading. So I write things like, remember to be patient, remember to, only take the best setups, and remember to only, oh, how did we get so many likes? That's insane. Something happened there. Something happened there. That's weird. Okay, never mind. Let's talk about that after the live stream. That's weird. Anyway, so so I combine a trading journal and a physical notebook journal where I go through my trading journal, I look at the mistakes I'm doing, and then I start writing about that. Right. So that's obviously very, very important for me to have that. Have that journal. Okay, I'm getting a little bit caught off guard here with the likes. Man, yeah, someone's doing something. It doesn't matter though. Okay, let's do the giveaway. Let's do it. Let's see, where do I actually have the giveaways at? All right there is where it's at. It's like whatever we try to do here to make sure that the giveaways are done in a proper way and not having, massive bots and shit coming in here is like, let's base it on the likes. Yeah, 2 minutes before deadline, it's like 100 likes is from nowhere. Yeah, that's not weird. Not weird at all.
Not at all. No, it's natural
Yeah,
process of
it's completely
coming in.
organic.
Completely organic. Nothing
Oh
happening.
my God.
Keep on walking. Nothing happening here.
Nothing to see here, YouTube algorithm. We're not doing anything weird here. Just to move along, move along. Oh man. Okay, I'm gonna be sharing that screen now. Okay. Smiley T, you won. No, that's from yesterday. Yesterday. We are. I will look into trying to make sure this does not happen again. All right, we're gonna do two winners today. We're gonna do two winners today because we did hit that 200 likes. Now remember, when you win, yeah, Smiley T was yesterday, I believe. Yeah, I think that it was yesterday.
Yeah.
So okay, so the winner here, you have 1 minute to confirm that you are the winner, and I want you to confirm that by giving me parts of the email address associated with the account that won. Okay, let's do this. Yeah, Barry, you'll get the credits into your The5ers Hub account. I'll be sending everything to the team at the end of the week. So at the end of the week, you'll get everything, or depending if they're slow or not, you get it at the beginning of next week. Okay, let's do this. Right, we got David R and Jack N are the winners of today's giveaway. And I'm going to set the timer, and you have to confirm if you won or not. And I'm just going to be changing screen here. See if we can get that. Clock is ticking. going to be very interesting. Well, there's no way, there's no point in saying congrats now, because we're going to repick the winners if, and I do have subscriber only comment, but okay, Jack N. What I want you to do, if you are the winner, I want you to tell me the first 3 letters of the email. If you can type in chat the first 3 letters of the email that you used to... Jack is here. Looks like it, but it could just be someone who just created an account. Yeah, exactly, ESPN. So we got Jack. He confirmed the winner. Where's David? David, I want you to be able to confirm that one as well. So now I want you to confirm that email as well. Where's David at? Oh my God,
77 David says it's me.
Okay, if you are 77 David, could you please give me the last part of your email?
Before the at sign, of course.
Yeah, before the at sign, exactly. I'm gonna give him a little bit, because obviously if he is the winner, then he's here and he deserves the actual account. I'm pretty sure it's him. We're not gonna reshuffle. We're not gonna reshuffle if it's actually him. Okay, David, you need to give me. Okay, so I'm just gonna give you 1 more minute, and you need to give me the actual. Yeah, it's him. Okay. Congrats, perfect, man. Good stuff. We got David is one of the winner, and Jack is the second winner. That's awesome. Okay, so at least hopefully you guys like this new way of the giveaways, where they're both confirmed. Thank you all for participating in the giveaway today. And yep, that's it. Thank you all for joining. Tomorrow we have Anastasia joining us for another live trading session. That's going to be a very interesting one. We're going to be doing some giveaways in that one as well, so make sure you join that one. All right, Jack and David, you're going to get your The5ers Hub accounts credited with credits, so that you can get a 20K bootcamp account, or use that credit to buy whatever account you want. And in the future, we're going to be giving away some merchandise as well, so you'll be able to get some VIP limited edition hoodies and stuff like that. It's going to be really cool. All right, guys, thanks for joining, everyone, and we will see you all tomorrow.
Yes, congratulations to those winners. I hope you guys indeed liked our new way of selecting the winners. I think it's fairer, and it needs your participation. That is exactly what we want. We want you to be participating in our live stream, learning, asking those good questions. And on that note, I wish you all the best, and see you guys tomorrow.
All right, take care. Bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other